Hi everybody, what's going on? This is Joel again. Welcome back to another one of my videos. This is actually my second video posting on YouTube, or at least second video going to go on YouTube. What we're going to be doing today is just going to be sharing one of my simple strategies I like to use, in which I target the previous day high. I know my last video was usually about the previous week highs and lows. I'm going to target today previous day highs and lows, and it's going to be just one simple strategy. We're going to be using one simple tool aligned with a few other strategies that we have, and aligned with a few other things that the market usually tends to do. So we'll go ahead and just get started. Alright, so usually Tuesdays and Wednesdays are actually my favorite days of the week to trade. I like to just wait on Monday so I can see what's actually going on Monday, and that's exactly what we did here. We actually started off on Monday a bit sloppy. We got Sunday right here, and then Monday we do see like a little bullish momentum, but we're just kind of stuck in a range until about New York Open. So we got New York Open here with this first candle. Also, we're also looking at a 1 hour Euro USD chart. I usually use a 4 hour chart for bias, but for this strategy, targeting the previous day's highs and lows, I actually like to use the 1 hour because I can see the entire week. I can see the entire previous week and the entire previous day, which is actually what we're looking at here. The trade we're going to talk about today actually happened on Wednesday, but Monday's momentum is actually important because that's what led us to, or at least me, to be able to find like a bullish momentum on Wednesday. So we got early New York here. I'm on Central Standard Time, so 6 o'clock in the morning. It's actually 7 o'clock in New York right now. We started off with this bullish momentum here, which actually created a fair value gap, and then at 9 o'clock in the morning my time, which is 10 o'clock in the morning New York time, we're already a few hours into the New York session. We got another bullish momentum here, which actually created a fair value gap. And then just going into London close, the rest of the day just died out. It just ended up in a consolidation for the rest of the day. But what we want to point out here is how Monday created this fair value gap here. This gap right here, where we only have buy side momentum, is actually called a fair value gap. I didn't make that up. One of my mentors actually made that up, so credit goes out to them. They're the ones that call this fair value gap. You'll be able to find anything on YouTube about fair value gaps. And then we got another gap here. The gap is pretty much, it just means that there was only buy side momentum on the market during that time. So I didn't trade on Monday, but I did see these two gaps, and you know, that kind of pointed clues out to me that we were most likely into a bullish momentum, unless Monday was going to create the high for the week here. And in this case, we could see on Tuesday that it didn't happen. So we come into Tuesday, London's a bit sloppy again, and then we come down at 8 o'clock in the morning my time, which is actually 9 o'clock in the morning New York time, and we got this one red candle here. This bearish candle kind of trades into the gap, going like right to the top of it, but it wasn't until the next hour where we got this candle actually went into it, and it went into about 50% of the actual gap and then just immediately took off. This was actually a good setup right here for those of you that like to trade right under the Asian range. Those of you that like to get the liquidity under the Asian range during New York Open, this is a good example. This would actually been a good entry because it's going to 50% of that gap and then immediately just trading up, only to go ahead and just create another gap. So now we got 3 fair value gaps that have not been filled, and that's what's actually going to line me up for my setup on Wednesday. So I'll go ahead and show you the little strategy I use. It doesn't work all the time, but if you have the right bias and the market actually pulls back a little, it does work. So going back to all these fair value gaps here, we actually got set up for Wednesday for us to target either the previous day high or low, but since Tuesday was such a bullish day, we got this bullish momentum here during New York session. We were actually still looking for more bullishness. All right, so the strategy is simple. We're just gonna grab a Fibonacci retracement tool, and we're just gonna draw it out from Tuesday's what happened? Yeah, we're just gonna draw it out from Tuesday's low to Tuesday's high, and we're just gonna stretch that into Wednesday a little bit. And I like to use the bodies of the candle. I don't like to get into the wicks too much, so we're gonna put that right there at the lowest body we can find from Tuesday. So I got Tuesday high labeled up here, and I got the low also labeled. And I'm just gonna draw the fib out. I'm gonna put some color to it so it's just better for visibility. We'll just go with blue. Alright, so I think that's a bit better. Alright, so something else I want to point out here, now that we got everything in blue, is that the only levels on my fib retracement tool I use are the 50%, 62, 70, and 79% retracement levels. The ideal entry point would actually be 70% here, but in this case, we can see that the market only went to 62%. So I explained that to you a little better as we move forward. Basically, since we're targeting the previous week high, and I know this is going to look like it's cherry picked since this already happened, but keep in mind that the fib levels are drawn out on the actual previous day. So we could actually block out all of Wednesday's price action, and we could draw out the fib either way. Like, we don't need Wednesday's price action to be able to draw out the fib, because I drew it out from Tuesday's low going to Tuesday's high. So you could actually do this like at midnight, usually before bed. I like going into my charts, and I like to point these kind of things out. So when I wake up in the morning from New York session, because I rarely or almost never trade London session, I do like to sleep. So I just wait for New York session, and then, you know, a lot of times New York session is also a continuation from London session. So to me, it's a lot easier to trade, and it's a lot less riskier. But yeah, I would draw this out like before I go to bed on Tuesday night. I'd go in the market and draw this out. I would see the previous week low, the Tuesday low and then Tuesday high, and draw out my fib from there. If we're bullish, I'm gonna draw it from the low to the high. All right, so our ideal entry point here is actually, I like to use the 70% level. I like to actually wait until the market goes into the 70% level. But now that we have everything drawn out, now that I've explained the levels, we're gonna go ahead and see what the market actually started doing on Wednesday. So we got our fib tool laid out. London session was a little rough. Nothing that I would go in there for. As I just mentioned, I don't like to trade London. But when we get into New York Open, 9 o'clock in the morning here, we got this one candle, and I can actually drop into a 15-minute time frame. If you want to get those optimal entries, we can do this on a 15-minute time frame as well. So this candle here, one I'm pointing at, is 9 o'clock in the morning candle. During New York session, is not New York Open. The market, what the market does here is trade into the 62% level fib, which is actually a good entry point to buy in. I like to wait for it to go to the 70% level, but since we had so much bullish momentum here, we can see that the market went straight into the 62% level here, and then just traded off. And it traded off from that point about, you know, maybe 60 to 70 pips you could have got out of that entire move. But what I want to point out here is a few different things that align with this strategy. So we got our fib tool laid out from Tuesday's low to Tuesday's high, but we also have this little gap here, which was a fair value gap that was created on Tuesday. And what the market did on Wednesday is actually trade into that same exact fair value gap, and it actually traded into about 50% of that fair value gap as well. Same thing that it did on Tuesday, trading into the 50% of the fair value gap here from Monday. So there's like two different things that told me that this trade was going to work out. We got our fib tool laid out going into one of our ideal entry levels, which is the 62% level. The most ideal one would be the 70% retracement level. If it goes down to the 79% retracement level, you can still take those trades, but those are going to be a lot riskier because our stop loss here would go right under Tuesday's low, which will be, you know, just a few pips below the 100% retracement level. That's where I would place my stop loss for this entry. So we would buy here in this area, and then stop loss would be down here. Our first target is going to be Tuesday's high. What the market did here was retraced into Tuesday's fair value gap, retraced into a 62% level Fibonacci, and targeted the previous day's high. So it actually, my first profit target using this strategy would have been here right above Tuesday's high, and I would have put it right above the body of this candle here. That was actually the one that created Tuesday's high. And then if you want to leave part of your position open, you can leave it 10, 20, 30 pips above Tuesday's high. So if we go Tuesday's high, the market actually traded 23 additional pips. So you could have went about 15 to 20 pips above Tuesday's high for your actual take profit targets. I personally don't like to do it. I just like to place my target right at the high. If we would have got an entry around in between the 50% to 62% level, you would have probably been making, you know, we got 40 pips. So I know you're not gonna make like the most perfect entry. You might not be in time unless you place an order right at the 62% level and the market actually executes it. If you did, you'd probably be getting about 40 pips, 40 to 42 pips is what we got there. But you know, I personally only like to target 20 pips per day. So I would have actually been satisfied with 20 pips per day. I might have left partials out, let partials run out until Tuesday's high, and then maybe just about 10 pips after that. But after 20 pips, I'm usually closing out the majority of my position. Alright, so I'm just going to go over it one more time. I'm just going to remove the fib from here. I'll get rid of this gap here too. Basically, we come in here, we see Tuesday's low, which is right here. We see Tuesday's high. We got this move right here, which is actually one of the most important things as well, that allows us to actually use the fib tool because of the bullish momentum we got. So what we do is just draw it from Tuesday's low into Tuesday's high, and Wednesday you can see the market retrace straight into that 62% level. We would buy here and we would target Tuesday's high, and if you want to, 10, 20, 30 pips above Tuesday's high as well. So on Thursday we actually had the same thing happen. Let me just get rid of this line and I'll show you. We can take the same fib and drag it into Wednesday's low. Then again, we're just going to use the bodies of the candle. You can use wicks if you want to, but I like to use the bodies myself. So we got it now going from Wednesday's low to Wednesday's high. So I personally don't like to trade on Thursdays. A lot of Thursdays are just sloppy, so I don't like to just you know, go in there. Thursdays are also, a lot of people call them reversal Thursdays. Back when I used to blow my accounts every single day, I used to be profitable from like Monday, Tuesday, and Wednesday, and I would blow everything on Thursday and Friday. Like absolutely everything on Thursday and Friday. It would just take 2 days to blow my entire account. So I personally don't like to do anything on Thursday. As you can see here, it was mostly just a sloppy day on Thursday. I'll just label Thursday up here so you guys can see. But if some of you scalpers out there like to go in the markets, we didn't switch to that 15-minute time frame earlier. I'll switch now since Thursday was like a bit more sloppy. And then, you know, obviously if we drop into a 15-minute time frame, we might just have to stretch our fib tool a bit. So that's what we did here. We're looking at a 15-minute time frame now, and we got Thursday, and we got our fib tool drawn out from Wednesday's low to Wednesday's high, and we got the same entry. We're gonna target, once again, we're gonna target the previous week high. So fib tool's drawn out from the low to the high, and then Thursday, right during New York Open, we start trading into the 62% level, then we get into the 70% level, and this one actually went to the 79% level as well. So this move would also give you some momentum. This move would also give you about 50 to 60 pips if you would have been in there. It's a lot sloppier than the previous days. We do see a lot of bearish momentum going into London, and you know, since Thursdays are actually reversal Thursdays, a lot of people like to call them reversal Thursdays. If I'm not clear enough about something, I like to just stay out. And we already had Wednesday take out the liquidity that was resting up here on Tuesday. So I actually wasn't too sure. Remember, I'm still in the learning process as well. So I wasn't too sure if Thursday was going to be bullish. So I was just like, you know what, I'll stay out. Last week, I think I lost on Thursday. So this week I'm like, you know what, I'm just going to stay out on Thursdays and Fridays unless something is like extremely clear enough that I could go in there. And, you know, this was clear because, again, we got the fib tool laid out. It's going into the 3 levels that I mentioned, the 3 levels I have on here. And on Wednesday, now that we dropped into a 15-minute time frame, we don't have the best of gaps here, but there is an area that was only traded on the buy side. Market actually has to go back and fill that in, and that's exactly what happened here. We got a gap, market fills it in, and it also aligns with our fib levels. So yeah, that's one of my strategies there. I'll probably be posting more videos about this strategy. You can see that on Thursday it did the same exact thing. Also take a look how the bodies of the candle, these candles here actually stayed above the 70% retracement level. 70% retracement level is like the ideal entry point if you're going to use the fib tool. And then right when it hit it, this candle, 8 o'clock in the morning, that's 9 o'clock New York time, right when that happened, it just took off. Like that first candle was what, 32 pips alone in 15 minutes. That could have been your entire trading day if you're just day trading. I would have been done right there. I would have been satisfied, completely satisfied with 30 pips per day. I would have been more than happy. But you know, this strategy is to target the previous day's highs and lows, and that's what we did there. It went as fast as it could right above the Wednesday's high. Alright, so that's pretty much everything I got on the fib tool. I'll probably be posting more videos on this tool, on this strategy. You'll probably find a lot of them on YouTube as well. But yeah, this is actually one of my go-to strategies. This is what I find to work the most for me. It's just relying on the fib tool. Just seeing those levels, just like visibility for me, just makes it click for me. So yeah, I hope you guys like it. Share anything in the comments you want to see, anything you want me to talk about, or you know, if you want to share something that I could probably share back, or just chit chat in the comments, I'll be more than welcome to. Thanks for watching, and I'll see you guys on the next video.